Hi, I'm Grant Stephen.
And I'm Chris Bernier.
And we're the two investment guys. This week, Chris and I want to turn back to the markets and talk about some of the things that we see happening there. You know, it's interesting, Chris, that volatility is back again. There's a lot of moving parts on the front burner. Not that they weren't there before, they were just on the back burner. Now they're on the front burner, and we're hearing a lot about them. We'll start with emerging markets and some of the currency contagion that's happening. We're seeing it in Turkey, and we're seeing it in Argentina, and it's spilled over to some of the other emerging markets and has caused this rather massive outflow of funds from those countries. And that was something that was sort of on the back burner, maybe not making a lot of noise, and now it's come full center. So we want to talk about the fund flows, and the U.S. is actually the net beneficiary of that.
Sure, absolutely. Well, the U.S. dollar is still the world reserve currency, and so whenever there's fear creep into the market anywhere, we tend to see a flood of money into the U.S. dollars. That's been also part of the reason why the Canadian dollar has been a little weak. But if we look at what the Federal Reserve in the U.S. has been doing, last year they talked several times about tapering their bond buying, and they finally implemented that the start of this year. And we're now seeing that as part of the reason why equity markets are taking a bit of a breather here.
Right, you know, that free money is just, there's a little less free money at the moment.
Yeah.
The other thing is, you know, the equity markets had a very long bull rally over a number of months that went unabated, Chris, and that's actually not normal. It's more normal to see pullbacks along the way, and we didn't really get that, and now we're getting that. And I actually think from a consolidation perspective, that's a healthy thing for shareholders.
Yeah, absolutely. And we talk a lot about the U.S. economy because it is still the largest economy in the world, but let's not forget about China, the second largest economy. We've seen a lot of concern about China and their slowing growth, and most recently the latest Purchasing Managers Index came in below 50, which is not a very good sign, actually suggests contraction going forward in the manufacturing sector. So that is another factor that is causing some of the pullback that we're seeing.
Right, let's talk really quickly then about the Canadian dollar, ever topical. The loonie's pretty weak. Why is it weak? Basically because the U.S. dollar is strong. It's also, the U.S. dollar is strong to all currencies. We're down, we went from 95 to 90 cents pretty quick. The Australian dollar was down 17% to the U.S. dollar from its peak. So, we see probably a little bit more of this coming, and I think we better get used to sort of this number where we're at now, give or take a little bit.
For sure. One of the other key catalysts that pushed the Canadian dollar lower was comments by the Bank of Canada, Mr. Pelosi, which sort of suggested that maybe our economy is weakening and he might consider cutting rates, which actually really pushed the dollar down towards that 90 cent level. I want to thank you again for your questions and comments. Please keep them coming. You can contact Grant and I at twoinvestmentguys.com.
Join us next week. Chris and I are going to talk a little bit about some of the things you need to think about for RSP season, which is upon us. So until then, I'm Grant.
And I'm Chris.
And we're the two investment guys.